Welcome to the May edition of AML Voices. Today we are covering financial access issues both globally and domestically. And our panel of experts includes Julia Yansara. She's the Program Director for Environmental Crime and Illicit Finance for the FACT Coalition. Sierra D'Souza, Financial Services Counsel for Congresswoman Joyce Beatty. And joining us from the Renewed Democracy Initiative is Uriel Epstein. Uriel, thank you also for joining us today. Um, Before we get started, I just want to remind everybody we do have the ability to take your questions, so feel free to put those in the Q&A box. And we are going to go for 60 minutes. And toward the end of the conversation, we'll ask each of our panelists for some basic takeaways and some other things that they want to build upon from their conversations. But let me first start with this. Let me set the stage why this issue is so important to both the AML community and society at large. And that's obviously the need for financial access and financial inclusion that helps humanitarian and other groups get funds, needed funds for groups in conflict zones, groups in other areas that need medical supplies, utilities, you name it. And the struggle sometimes that they have, that's what we're going to go into in detail today, with financial institutions that have to make a decision based on their requirements to ensure that the clients that they are dealing with are not somehow engaged in illicit activity. I always like to point to the Financial Action Task Force and some of the reports and things that they have done over time, because they recognized fairly early on that while financial institutions and governments need to be very vigilant regarding terrorist financing and those issues, there are some both unintended impacts and some collateral damage to the groups that I mentioned. The FATF has done a number of things, but one of the areas that recently has helped the industry writ large is the guidance document that they issued on financial inclusion based on their recommendation one regarding money laundering and terrorist financing. The previous FATF president, Elisa Madrazo, among other things, said this: bringing more people into the formal financial sector is crucial to our fight against financial crime, as it reduces the size of the black and informal markets where criminals and terrorists hide their operations. But it also addresses a clear injustice in our society. Financial exclusion largely affects people in disadvantaged and vulnerable communities. To the majority of cases, these people are not higher risk, but are excluded from financial services due to the cost or lack of formal documentation. So those are the issues that challenge us, and our panel is going to weigh in on those various issues. Let me start, if I may, with Uriel. Uriel Epstein is with the RDI that I just mentioned, and one of the major things that they have done, among others, is provide at least at the most recent reading that I saw, over $15 million to Ukraine since the attacks from Russia. So, Uriel, I want a couple things. One is maybe build upon some of the statements that Elisa made regarding how important this area is, but also some of the impacts it has had on your organization. And then obviously we'll get the panel to comment on some of the areas that they're working on as well.
Well, thank you so much, John, for welcoming me and wonderful to be with you all. So quick background, yes, so my name is Yuri Lepshin. I run the Renewed Democracy Initiative. We're an organization originally founded by Gary Kasparov, who is our board chair. For those who don't know, he's the former world chess champion, very prominent opponent of Vladimir Putin. And our mission is to try to unmask and confront the international alliance of dictators and to try to inspire folks in the US and in other free countries to value and defend their own democracies. And so one of the key thrusts of our efforts has been sort of direct action. It's one of the ways in which we are different from a number of other advocacy related organizations. It's that, I've led now two delegations to Ukraine, most recently just a few weeks ago with a number of prominent investors and others to determine basically how we can be supportive to the Ukrainian civic society and private sector, in addition, of course, to the more public advocacy that we do. But even beyond that, of course, on the direct aid front, We are uniquely positioned. So basically, Gary, by virtue of his reputation, Rolodex, and so forth, can obviously attract a fair bit of attention in terms of where there are holes in the aid. And obviously, this is a difficult thing to do, right? The Red Cross, for example, does not go within a few kilometers of the front lines, right? Like they basically stay away from that area. We do the exact opposite. We go as close as humanly possible to the front line. So our most recent delegation, for example, was within just a few kilometers of where there was actual fighting that was happening, and we've given aid to these areas. Now that obviously poses unique challenges in terms of getting money from point A to point B. And this was something that I think we as an organization didn't quite understand early on, right? Like there's the sense that banking is a relatively commoditized good and that, you have money in point A, it should be, no different than me Venmoing someone privately to send that money to point B. And what we found over the course of the last year is that that is very much not the case. And so this has actually become worse over time, up to the point where over the course of the last year, and what led me to this webinar is that a few months ago we received a $2 million grant, which we would then distribute to local organizations in Ukraine. Upon receiving the grant, I began the process of identifying who our grantees would be. And we tried sending an initial wire for just over $700,000 four times when it failed. So that wire failed at least four times. And then I received a notification from Chase Bank, essentially notifying us that they were going to drop us as a client. As a result, and they didn't give us a reason actually, but basically that we would be dropped as a client. And that decision, it turned out, had been made prior to us trying to disperse the money. It happened upon the receipt of the $2 million grant. We as an organization primarily are not funded through seven-figure grants. We're primarily funded through, five-figure grants, et cetera. So the seven-figure grant was larger than the average incoming wire or check. We were not given a reason. And so I had no context for what happened. And so Gary, our chair, basically put out a tweet about what happened, where I kind of gave him all the details. And that tweet went relatively viral, and we got a fairly significant response from the public, which ultimately led Chase's executive office from reaching out to us and basically saying, like, oh, this whole thing was sort of a big misunderstanding. And we did not actually mean to, throw you off or whatever it is. Um, the truth is that however this happened for us, we were going to be okay. We have Kasparov's name and reputation. We have other connections. We had already begun a relationship with a different bank. We were going to be fine. The consequences, however, of what happened is that number one, this was in the dead of winter when Ukrainians were literally freezing in their homes. The point of this aid was to try to provide heat. So you led with there were quite we it led to about a 2 week delay in processing these funds, which quite possibly led to actual deaths on the ground. But the bigger picture domestically for us to think about is that we are lucky. We have very prominent individuals affiliated with us. I have the opportunity to speak here with all of you. Most local organizations, most voting rights orgs, things like that, don't have these connections. And so if something were to happen to them, they would not have been able to get the kind of public push that we could get in order to move this forward. So that's problem number one. Problem number two, I think, is a general communication issue. So had the bank communicated with us early on in order to go through a due diligence process, great. That would have been the logical thing to do rather than waiting months. So I got a call from the executive office, a kind of another call from them a few days ago, finally doing the due diligence, asking me, how do I vet our grantees? How do we process the funds? All of those core questions, fundamental questions that I should have been asked or that my staff should have been asked months ago prior to us being dropped as a client. So I obviously would recommend that those types of questions happen sooner. And, last but not least, just kind of having a broader education. I can't speak from the point of view of sort of underbanked individuals, but I can speak from the point of view of organizations. There needs to be sort of a broader education among nonprofit groups about how banking is actually not commoditized, not entirely, and how the needs of organizations do differ in substantial ways from the needs of individuals.
A couple things I would mention. One is totally understand and support your notion about communication. So several years ago, a number of us worked closely with the World Bank and some humanitarian groups to better understand each other, meaning what do the banks need and what do NPOs or NGOs have to provide. And that was certainly something that wasn't really previously done. It sounds like in this case didn't happen until, the spotlight switched, obviously. So that was part of it. The other part of it is by the financial sector explaining, and I'm not saying, Uriel, that this was the case in your situation, because I don't think it was. In some cases, when banks make a decision to close an account. The frustration from your and other groups, understandably, is you're not telling us why. We're getting no information. How can we make adjustments? What happens is some institutions make the decision if they thought something suspicious had occurred, they may have filed a report with the government, right? What they call a suspicious activity report. And those things are protected under law. And if you disclose that one has been filed, that can be a felony sort of situation. So in some cases, again, doesn't sound like this was the situation with you at all. That's why the bank will simply say it doesn't fit our business model. But having said that, here the due diligence clearly should have been done first because it's not that hard. I mean, once I found out you folks were participating, it was easy enough to look you up online and see what your organization does and then to ask the follow-up question. So I think that's a really good, solid recommendation that we continue to make. But your example is perfect because here's a situation with all of this. If it was a misunderstanding, as they said to you once the spotlight occurred, could have been overcome by conversations, meetings, and that sort of thing, right?
Yeah, I mean, and just the basic sense of like what is needed from the organization. Most nonprofits, especially smaller ones that don't have dedicated accounting departments or finance teams, are not going to know the basic facts that they need to be providing the bank in order to move their own money around. And so
Right.
in this case, look, we did know. I mean, the truth is, if they had asked me any of these questions, if I needed to get my general counsel on the line, if I needed to get our finance people on the line, we would have been fine. And even though they decided, we were at least temporarily dropped as a client, for a period, we still were going to be fine because again, we were lucky enough to sort of have those connections. But I do worry that the vast majority of smaller local organizations, just they're not going to have that kind of access to be able to do that. And then one last note, which kind of I think is unavoidable as the political environment continues to evolve, is that look. I to this day don't know for certain the reasoning, right? I at this point I increasingly think it had to do with anti-money laundering and so forth and de-risking. However, my initial hypothesis had to do with politics, right? That we were perceived as a quote unquote high risk organization politically by virtue of the fact that we are equal opportunity critics of anyone and everyone that we believe are posing threats to liberal democracy in the classical sense of the word, and that this was actually a political decision. Again, I
Right.
don't know whether it was one or the other ultimately, but those are real concerns, and I would encourage banks to again set those criteria out very clearly, like what would lead to them determining to drop a client. What are the things that organizations need to avoid doing? Or alternatively, what information should we provide upfront? Most of us, when we fill out a wire transfer form, it's pro forma.
Right.
We do the thing we need to do, whatever our accountants tell us, and that's it. But if the bank actually needs detailed information, that's something that needs to be communicated to NGOs.
Once we send the recording out, we will put in the notes the document that I referred to that we crafted, we meaning a big group of stakeholders, with the World Bank a number of years ago, but it still has those principles in there and just needs to get more play. Before I go to Julia, I want to ask her about correspondent banking and the issues there. Sierra, is there anything you want to add to obviously the issue of, we'll talk later about de-risking, de-banking, that sort of thing. And I know the House is looking at reforming AML. In terms of what he's outlined, what have you been hearing either from constituents or witnesses, and what light can you shine on this clear challenge that we still deal with today?
Yes, absolutely. Thanks, John. And also thank you for having me here. This is a really important topic. And I really appreciate hearing your story, Uriel, because of course, this is an example of what we don't want to happen, and what's happening too often. As John mentioned, I work for Congresswoman Joyce Beatty. She serves as the ranking member of the National Security Subcommittee, which has jurisdiction over illicit finance, AML, CFT, everything, de-risking, everything we're talking about today. But she also just represents the Third District of Ohio. And we have a ton of constituents who, are calling in. I've been with her for 4 years. I've heard several stories of, folks getting their accounts shut down. It's affected remittances, the issues in the Caribbean, just so many different versions of, I don't understand how this happened. Can you help? There wasn't any clarity. So, and we hear a lot of stories from other financial services members, off committee members as well, who are told that, the reason is AML broadly. And they don't, know the specifics of the AML compliance frameworks, or why the costs of compliance, and why for various reasons banks are and financial institutions are pulling out of either certain regions or not serving certain customers, or certain industries. And this has been going on for a long time, and it's long been a bipartisan issue. But unfortunately, I think the tone has changed a little bit in recent years. I think our perspective is that, if we're going to talk about the de-risking of certain customers, we should talk about everybody who's getting impacted by this. There's legal sex workers, nonprofits and charities working internationally, as we've already discussed on this call. And I mentioned the Caribbean, correspondent banks leaving the Caribbean, and CARICOM countries not having access to financial services. There's also, there's been talk about in recent weeks with some activity out of the administration, immigrants, MSBs. So I just, there are many categories in addition to, certain political groups or certain financial sectors that might be targeted. If we're going to talk about this problem, let's cover every category. And I think our overall approach to this is balance. So, we want to make sure that we're expanding financial services and access to financial services while also keeping the system safe overall. And I think there's constantly a tension between those two, because members are hearing from their constituents stories like Uriel's. And then at the same time, we want to make sure that, our AML CFT framework is there for a reason, and we don't want to be making it easier for bad actors to take advantage of the financial system. So I think we had a hearing on this last week about BSA reform, and there are key ways where we can, streamline compliance and, just simplify it so that banks are not incentivized to just completely pull out of certain categories of customers or regions, but still maintaining the integrity of the framework overall in the financial system. Sorry, I don't know if that answered your question at all,
Yeah,
John.
no, you did. Yeah, of course, of course. And maybe you just mention briefly, and again, we're gonna have Julia fill in what's going on with correspondent banking. But one of the executive orders last week, and I don't have it in front of me, but and I'm paraphrasing, seems to more than suggest that financial institutions will have an obligation to make some sort of determination about new account holders and their immigration status. I know that some organizations sent out notes claiming that we're happy that it wasn't a requirement to go back and look at your current account base, but I think that's losing the forest from the trees, frankly. But have you heard anything since the executive order? Did anybody, I don't recall, Sierra, did anybody mention that issue in the Q&A with the witnesses last week, or are you hearing anything about what that order might mean from a practical standpoint? Because I think it could prevent some individuals or organizations from continuing to have financial access. It's a possibility given the breadth of that order. But what are you hearing from peers and colleagues and others, if anything, about the order?
Yeah, so this was a topic at our hearing because I think it had just come out a day or two beforehand. I think we're still in wait and see mode. I think the first step is that Treasury's been directed to issue guidance to financial institutions on how to implement this. But of course, we're very concerned about just folks completely getting cut off from access to the financial system. And we talk about financial inclusion broadly. It's been a topic that my boss has championed throughout her time in Congress. And there are real and serious impacts of folks not having access to financial services, and they get pushed into unsafe, unregulated financial products. As you mentioned at the start, for the FATF recommendations, the safety of the financial system overall is advanced with financial inclusion, and just including the maximum of legitimate customers in the system. So it's extremely counterproductive efforts like this, but to answer your question, I don't have any clarity beyond what was in the order, and the witnesses they were a little sidelined too because it had just come out. And we're waiting and seeing, but it's very discouraging at this point in time.
Yeah, no, I hear you. I mean, I suspected the same thing since it had just been released. Julie, I want to move to you. We talked as we prepared for this webinar about something that Sierra's already mentioned, and that is the challenges of correspondent bank relationships. Correspondent banking is characterized as a higher risk activity in the manual the examiners use that is public, certainly from public statements. And I know that there's been hearings over time. I'm sure Sierra's been part of those hearings as well in the past several years from groups that have had difficulty, if not too many hurdles to have access. Talk about what's going on there. And I want to give you a minute up front, though, to plug the FACT Coalition and your organization, and then just let us know what you're hearing about the Caribbean, Latin America regarding correspondent banking.
Yeah, thanks a lot, John, and it's great to be on here. Thanks for the invitation. At the Facts Coalition, we work on U.S. anti-money laundering policy and look at the way that that intersects with other issues that we think are vitally important, like the environment. That's a lot of my work, but also issues of equity, issues of democracy. So it's anti-money laundering, but with a wider aperture and looking at how it intersects with different issues that are important to our country and our world. I think for correspondent banking, I mean, this has been an ongoing issue over the past 20 years. I think that I agree with Sierra's comments. These are long-standing issues that require attention. We have advanced to some extent, but we still continue to see problems. Maybe connecting this to some of Uriel's comments. Just like we see de-risking of nonprofit customers and other vulnerable groups who tend to be, to put it somehow, poorer customers, perhaps less profitable customers to the financial institutions, to be very, very blunt. I
Less
think
profitable, better than poor.
Thank you, Ariel. Point taken. I think we see something similar with de-risking of correspondent banking relationships. Often this affects poorer countries. It affects countries in the developing world. And this doesn't necessarily follow what we know about risk and money laundering. Arguably, the US is the best country in the world to launder money. And yet we don't see the US being excluded from these relationships, right? We often see them impacting small, many oftentimes island nations in the Caribbean with less resources. These are going to be less profitable financial relationships for those institutions involved. So there is sort of a parallel there where this is not just about risk of money laundering. This is about profit for the financial institution. Now, that doesn't make them monsters, but that does make this, part of the conversation. And I think it's an important element to point out. I also want to highlight how issues with correspondent banking and de-risking of correspondent banking relationships can impact remittances. Uriel has mentioned the vital role that nonprofit organizations and humanitarian organizations play in delivering humanitarian assistance. At the same time, we know that remittances can sometimes play a similar role. When we look at countries that are affected by natural disasters, conflicts, severe humanitarian crises, it's often remittances that arrive first, and they play this incredibly vital role. But when banking relationships are disrupted, when there is de-risking in the correspondent banking relationship, when there is de-risking of the remittance service provider, which is another issue, we see that some of that vital humanitarian assistance is disrupted. So I think that this is another important element to consider for this conversation.
Right. And I think that that's historically when the NGOs talk about their challenges, correspondent banking groups make the same thing. Uriel, when you were going through the issue with the bank, were you or your folks attempting to talk to other institutions, and did you get sort of any recommendations from them? I mean, obviously, it ended up being successful based on uh, how you spotlighted it, but just in general, as you were trying to
Yeah,
figure out what the heck went on, were you trying to talk to, because you yourself come from a background in the private sector, so you've been in other
I do.
organizations, so you probably have a nice Rolodex as well. So did you
So,
try to figure out what was causing these issues?
well, the very issue, I mean, I come from the private sector. I started my career at the Boston Consulting Group and then I worked in tech. So, quite frankly, my employers were exactly the very profitable organizations that, had everything they needed and had dedicated finance departments so that, the general practitioners, right, when I was at BCG or generalist consultant, let me tell you, the last thing in the world I was ever thinking about was money moving from point A to point B. I mean, it was like water in the tap. I turn on the tap. I don't wonder whether or not water's going to come out. I know it will. And as in the nonprofit world, what I've found is that you don't always know if the water's going to come out. You have to touch that tap just right. You got to open it a little bit, close it, you got, and so, and by the way, when you're sending money internationally, that's exactly right as it relates to the correspondent banks. I feel like anytime I send money abroad, I'm like, I'm playing a lot, I'm playing the lottery. Like 90% it'll go, it'll be fine. But 10%, my director of ops is going to have to do something, and whether that's cop on the phone, whatever. So what we did when this happened to us is we simultaneously did three things. We reached out to other nonprofit organizations, because again, my contacts in the private sector actually would not have been all that helpful.
Hmm.
Um, and I will say there was a lot of concern and consternation among other, fairly significant nonprofits, many of whose names you would all recognize. But the concern specifically was because we did not know, and I guess to this day we don't know for certain whether what happened as a result of AML or if it was a result of political de-risking and political concerns. So, at this point, I think it's more likely to be AML related, but I don't know that for with 100% certainty. So there was a lot of concern among the nonprofit world. I then reached out to political folks. So some of the, people I imagine who are in this webinar, including on the banking committee and elsewhere, to basically see, what the hell's going on. And then most importantly, the third area was which is the area I kind of figured would be the one that would most immediately lead to a change. We reached out, we did a public push. And, as soon as thousands of messages, shares, whatever started coming in, I got the notification from the bank. The last thing I did, though, and this is, to be honest, a piece of advice that I offer now to other nonprofits, is that we need to de-risk. So I tell other folks that you should have more than one bank. You shouldn't put all your eggs in one basket. Because the only reason the delay in the aid that we were providing to Ukrainians was just 2 weeks instead of longer was because we already had a relationship with Customers Bank, which sort of was a smaller regional bank, which therefore was very quickly able to help us. But had we not had that secondary bank relationship already set up, we would have been totally stuck and we would have had all this money and no ability to get it from point A to point B.
Eh, Julia, one of the things that your organization does exceedingly well is to spotlight the gaps in various laws and regulations. And obviously, access and inclusion are impacted by some of those gaps. Um, Talk a little bit about the focus that you folks have on beneficial ownership issues, the corporate transparency issues that have obviously been changed to some degree by this administration, not being political, but from a practical standpoint, as you say, so much money laundering goes on in the U.S. So to try to close some of those gaps, see, if you close some of the gap, perhaps banks don't make decisions like, well, we're going to close this account or that account. They're going to spend their resources and time where they should. But talk a bit about the concerns that the FACT Coalition has had regarding the most recent activity on or lack of activity on shell companies and those areas.
Yeah, so I think unfortunately there's pretty good evidence that the US is one of the easiest countries in the world to launder money. Um, there are a couple of big gaps in our system, and these, frankly, make it hard for financial institutions to navigate. They make it hard for law enforcement officials to, follow and build cases. They make it hard for law-abiding businesses to compete with the bad guys. One of the big ones has to do with anonymous shell companies. Here in the US, most states require very little information to register a company. We see cases all the time of, anonymous companies, LLCs registered to, shady lawyers. The address is, a PO box in a strip mall. And they're
Right.
just things that, it's hard to know who is really behind that company and, whether it's good guys or bad guys who are operating there. So I think that solving some of these big gaps in our system would make it easier for the financial sector to navigate some of the risks that they're exposed to. I think it would make it easier for law enforcement. Frankly, what concerns me is we know that this is a problem, yet under the current administration, there's been a decision not to address this problem. Um, I think that that's, misplaced. We should be addressing through our anti-money laundering and counterterrorism efforts the areas of greatest risk, rather than, frankly, going after nonprofits that are delivering humanitarian assistance or whatnot. So there's a bit of a disconnect. Um, I don't want to make it all political. This is an ongoing problem that we have been dealing with for 20 years. So it's bigger than this administration. But I do think we tend to see a gap between the real money laundering risks and some of these actions of de-risking that tend to be, targeting groups that, frankly, when I'm looking at it from a very technical perspective, do not present a significant money laundering risk. So why is that? And kind of peeling apart that onion, trying to solve that, I think is an important exercise for all of us in the anti-money laundering space.
Sierra, I think all the banking agencies, by an earlier executive order, were required to go assess whether or not, and I'm paraphrasing, that they had debanked any entities and provide that data to the various banking agencies. From what talking to some of those institutions, they've done the research and haven't found anything. They just haven't. And I think that tells you quite a bit. And that's debanking of not NGOs. They want to know about other organizations that we're obviously well aware of. Are you hearing from constituents about that issue? Because I know there are two states, I think it's Florida and Tennessee, where now you can actually bring an action against a financial institution that has closed your accounts if you make the case that it was for political, religious, or other reasons. I don't think to date that statutes have been utilized yet, but that was definitely in reaction both to the order and the public comments from certain individuals that they had been debanked. What are you folks hearing about that? And again, from last week's hearing, I don't recall if that was covered by either the members or the witnesses, but what light can you shine on that issue? Because it is relevant to the issues that Uriel raised at the front end.
Yes. So I don't think I'm aware of the states that have passed these laws. And as far as I know, there haven't been any claims yet. But I mean, we have a lot of concerns with these laws. And I think, you know, the issues that we've heard of from the current majority in Congress, in the last couple of years about certain instances of debanking. We're hearing the same feedback from, our financial institutions that come in, and saying that they haven't found any evidence of this. And I think our concern then has been that this is sort of selectively, talked about as an issue in financial services, and it's become a political issue, unfortunately. But I have not heard stories from constituents saying, that they fit one of these categories that we're hearing about from, colleagues on the other side that are extremely common, and discrimination against members of the conservative party or certain wings of
Right.
of the political spectrum. It's more folks like what Uriel described, which is that they're a nonprofit, they're doing legitimate business, they're a sex worker, and they don't have access to the financial system. And that's why our approach to this is holistic. And that this came up at the hearing last week, that there are, several instances of, just this, yeah, balancing act of how do we, minimize risk and be responsive to that, while also ensuring access to the financial system. And I think that the very clear difference between our approach and the Republican approach, again, not to make this political, but there's even on the CTA issue, as Julia mentioned, there's this balancing act with compliance burdens and actual regulatory protections that need to be in place. And the trend at the moment seems to be, let's reduce compliance and let's be responsive to financial institution or business concerns that their compliance costs are through the roof. And it's criminalizing paperwork or whatever terminology they're using. And we would rather not throw the baby out with the bathwater and just have a much more deliberative approach to, okay, there are clearly areas where we can streamline, and there is a bit of unnecessary, hoop jumping. And how do we make those tweaks while still preserving the integrity overall? And it feels like that balance has kind of been thrown out the window recently.
Yeah, I mean, the groups that have asked for help in debanking are, private ATM owners, gun dealers, that sort of thing. What I also thought was instructive was the White House comment on counterterrorism that came out like a week or two ago, and they focused on domestic terrorists, what they said were Antifa. Never mentioned Proud Boys, Oath Keepers, all that kind of stuff. So unfortunately, it has become pretty political. So the financial institution, not defending them, but we're sort of caught in the middle, trying to figure out how can we continue to bank for societal value, which these organizations do provide, and not get caught up in unintentionally banking an entity that's moving illicit funds. So if I'm going back to you and I say, all right, given your experience both in the private sector and what you're doing now, I know you're still the private sector, but you get the point. And you're going back, and you say rightly, the bank should have reached out to you first. If they had, what would be some of just ballpark, obviously, I'm not asking for proprietary information. What are some of the elements that you would recommend that other people in your situation should do when a bank challenges them? Like, what should be, hey, I'm going to offer you, this is what I can show you to prove our due diligence as an organization, how we are run, that sort of thing. Walk us through some of those items.
Yeah, I mean, the biggest one is systematized thinking.
Hmm.
That's what we did at BCG all the time. I mean, that's what BCG, the McKinsey, Bain, that's what all these organizations are famous for. And quite frankly, I think it's lacking a lot in the nonprofit sector, right? Which is understandable, by the way, because we in the nonprofit space, especially in the small nonprofit space, need to move quickly.
Right.
And we need to do things that won't necessarily scale in the same way as a startup tech company. By the way, I actually think that my experience and RDI's experience will be a lot more comparable to a startup tech company than to what I saw at BCG, Uber, and what have you. If you're a VC-backed, venture capital-backed tech startup, then you have the VC fund behind you and their resources, not just financial, but network and institutional. But if you're a startup that did not take VC money, then you're going to be in the same boat that we were in, which is to say that, do you have all of do you actually have a rubric essentially for how you identify your grantees? Do you have a sense of how are you measuring the impact of the money? How are you ensuring that the money you send is going to the places you think it's going? So we luckily have all of those answers. In fact, had Chase Bank called us and asked me the questions that they ended up asking me a couple of days ago, had they done that a few months ago, I would have answered, we had all of this stuff prepared. That's our whole pitch, essentially, is that we can guarantee that every dollar goes exactly where we think it's going. And we have a number of policies to do that. And one of them, by the way, so for those organizations who provide remittances, who provide money abroad, it's funny. Initially, I was a little hesitant to like put the RDI brand on various stuff because I'm like, look, it's not really about us. It's about helping Ukrainians and so forth. I'm going back. I'm like, yeah, I wouldn't even have any hesitation. Like, no, I want everything needs to be branded RDI because that's an element of proof. I come back with photos where I see a generator in Kiev or a water filtration unit in Kharkiv. Then you see a big RDI logo on it. Then you know that that is the thing that you provided the money for, and it's physical proof that the money went where you intended it to go. So my advice to any such organization is be creative. Think of a way to demonstrate that this money was used for the things that you said it was used for. And obviously it has to go beyond just like email confirmation, right? Or even a formal acknowledgement letter. So for us, because much of this is physical aid, we make sure it's branded. And that means that it's a little bit of a tax on us, right? So like we say we provide $100,000, I'm making this up, right, to build this thing. Well, 3% of that is gonna have to go to some branding or whatever to make sure that we can prove that the 100K as a whole went where we wanted it to go.
Uh, Julia, similar question. I know the Fact Coalition is not going to be advising people that are harmed by correspondent bank de-risking, but uh, since you guys are AML folks as well, what sort of recommendations besides the obvious do you make to these institutions? Because as you said, for the most part, poorer people are harmed more than others if correspondent bank relationships are are ended. So that, and then I'll ask Sierra what the witnesses have said in previous hearings regarding that world as well. But as you rightly said, it's been going on for 20 years. I mean, this is not a new issue. So if there's been any successful either communications or recommendations that you are aware of, what are they, that sort of thing. So what are you hearing? Like I said, I realize that the goal of your organization is not to provide advice and counsel, but I'm sure you're aware of some of these situations.
Yeah, thank you for that question. I think like more than providing advice or counsel to people affected by loss of correspondent banking, it's more advocating for thoughtful, effective, risk-based approach to anti-money laundering policy here in the US. And there are not many people here, I think, working on this in the US who understand both how anti-money laundering works as well as what needs to happen in terms of financial inclusion. I think that I can think of there may be a dozen or so people working on those issues, but how can we pull those together and implement this more thoughtfully? I think there's also a need for folks here in the US to hear the fact that poor people are not inherently risky for AML. Immigrants are not inherently risky. International activities are not inherently risky. I think that we need to challenge that a little bit and push for a more nuanced approach to anti-money laundering. Um, we have tools to understand areas of greatest risk. We've done a lot of work on this as the US. We have these like core foundational documents like our national risk assessments. So we can look to this and better understand risk and push back a little. There's a very like facile idea that, small NGOs are going to be risky. Why? Says who? Remittances. Oh, they must be risky. Actually, if we look at our national risk assessment, what it says is that informal remittances are hugely risky. It doesn't say that remittances are hugely risky, right? So pushing back on that a little bit and challenging sort of your typical US thinking around these issues, I think that is a really important role to play. Um, as for communication, I think this is key. There have been a lot of efforts, and I don't want to minimize them. And I imagine some of the folks on this call may have been involved in some of these efforts over the years. I remember very well when I started on this work about 15 years ago, sitting down at a round table with MSBs, with diaspora communities, with Treasury, with State Department, and trying to brainstorm solutions. So there has been work done. We have, new documents by Treasury came out the past couple years, how to tackle these problems of de-risking. So there is progress, but more needs to be done. I think, Uriel's case shows clearly we have not solved this. We have to do more. And I would just caution folks, let's not politicize this issue more than we need to.
Yeah.
That really doesn't help. We need to bring people together and recognize this is impacting a wide variety of constituencies. Cherry picking, well, this is affecting, my political side. That doesn't help because this is such a technical problem, and it's going to require long-term, ongoing communication at sort of a more technical level to resolve it.
And I'll quickly chime in
Sure.
if I could actually. So in the
Yep.
interest of depoliticizing it, so much of this I'm putting on my consulting hat has to do with inefficient operations, right? Where you have massive banks, right? Massive organizations where departments are not talking to each other. They are siloed. And so as a result, when you as the client, as a small nonprofit, for example, you're trying to figure out what happened, right? The amount of hours that one of my colleagues had to spend on the phone getting bounced from department to department. I mean, I'm sure all of you, everyone on this call, everyone on this webinar has at some point experienced being on the call with one of these big providers and getting bounced about from department to department for 3 hours at a time and just getting ready to kill yourself from frustration. And for again, for this is a massive operational tax on small organizations because we don't have dedicated departments that can handle this stuff, right? When I was at BCG, I never had to wait on hold. If anything happened, which to me never did, but if it happened to one of my then colleagues, they would just call the finance department or operations department and they would take care of it. RDI, organizations like RDI, we don't have that luxury. And so for whatever it's worth, for our one of my takeaways has been that, well, maybe we should bank with smaller banks that don't bounce you around from department to department and for whom you might be a slightly higher priority. It's a trade-off. You lose some of the heft of the bigger players, but you gain by basically having a single point of contact. But even for the bigger players, again, I don't pretend to know the ins and outs of banking, but I actually think that there is an operational solve here, and if not a full solve, at least an amelioration, where if you just identify opportunities to break through these silos and if you decide that, hey, someone might pose a greater risk to you, just have one department capable of cutting across bureaucratic red tape and providing both asking the right questions and then providing the right answers. One of the reasons, like this wire, we tried sending the wire 4 times. Each time it failed was because we kept getting conflicting information. One of the times, by the way, which is the scariest thing for an organization like us, was that, we were led to believe briefly that our recipient was on a list. We had checked the OFAC list. We had our
Right.
general counsel check it. So for a second, I'm like, oh my God, did we miss it? Did we somehow not notice? And I double checked and no, of course not. Our recipient was not on any OFAC list. We were all good. But things like that, like we were given conflicting information by different people. Again, I don't actually think it was political. That part of it, I don't believe is political. It's purely bureaucratic and operational. And that is something that I think would just have a massively disproportionate impact. And presumably, I would hope that this is an entirely bipartisan frustration. Nobody likes being put on hold, for 45 minutes at a time.
Right. Uh, we got a question here. I don't know if you've had any experience with this, Sierra, and this is an adjacent to what we're talking about. Someone wants to know, do we believe if 314B, which is the ability of banks and others to talk to one another, has that communication helped at all in this space with MSBs, law enforcement, this particular person's with the casino industry? I know that's a broader question than what we're talking about, but in the reform conversations, have you heard anything, positive about 314B, which is it's a positive tool. I don't know that it always gets utilized that way. And have any of the witnesses say we need to either streamline that or figure that out? And anything with that communication tool that you guys have heard about?
Yes, that is something that does come up a lot. I think one of the main complaints that we hear from FIs in these discussions is about information sharing, and there being limitations on what information can be shared, and that kind of for illicit finance prevention overall, there needs to be improvement and streamlining here. So I think our approach is that no option is off the table. We're willing to explore anything that will help repair the system that is clearly, failing a lot of people right now. I love that small banks came up. I think for financial inclusion broadly, we always talk about strengthening CDFIs and MDIs. These are local mission-driven lenders that understand their community, they understand their customers, and we should be investing in them more. I don't know how we haven't gotten really into technology, but I think that's a huge, solution area. We need to figure out how we can, lean into responsible technology innovation while still keeping appropriate consumer protections in place. Digital ID solutions for customer identification. We really need to be looking into this very thoughtfully. And then I know under the last administration, a lot of recommendations came out of Treasury, specifically on de-risking and a strategy around it. And there were some great ideas that came out of that, and we kind of haven't done anything with them yet. But, we talked about risk-based AML CFT programs. There was an NPRM out of FinCEN that came out on this in April. And, this is an area of agreement. It depends what the final product looks like, but, we should be shifting to a risk-based system. Education for examiners so that they understand the effects of de-risking and they have better training about, the impacts of the decisions that they're making. And it's also come up before, longer notice periods for account terminations. And that would probably be a small change that has a huge impact. And just, a lot of little BSA tweaks, I'm sure, that can, maintain integrity while still just streamlining the process. So there's a lot of work to be done here. And we don't view this as political. I think if we get down to the nitty-gritty, provisions, I'm sure there's a lot of agreement, but high level messaging is unfortunately at this point political.
Yeah. Julia, you wanted to add something?
Yeah, just back to the 314B question. I think like this type of information sharing tool is so important. It can be so helpful, but I'm not sure that this is the solution to the type of problem that Uriel is describing. I don't see this as a problem of, challenges with financial institutions talking to each other or talking to government. Rather, I think that and Uriel, correct me if I'm wrong, but what I'm hearing is this may be a case of financial institutions not talking to nonprofit customers. And so I think that, we need more basic communication just with customers. For folks from the financial sector, on this call, I would encourage you, a lot of this is complicated. It requires big picture solutions, but something very concrete that I think would be very useful would be for you to talk to your nonprofit customers before there's a problem, understand who they are, what they do, talk to someone who works there if you can. And similarly for nonprofits to build that relationship with the financial institution before something goes wrong. So it's really strengthening that very basic relationship between the financial institution and their customer.
Getting the ability to get a human on the other end of a phone call is probably the single most important thing ever. And by the way, when I went back, I did the very consulting thing when I was choosing between banks. I was looking at interest rates, technical things like that. If I could go back in time, I would not waste time on any of that because all of that is marginal. I mean, we're talking about, up to 10 million a year, something like that for us. Interest rates they're not going to move the needle. They're not going to be so different for us as to move the needle, I should say. But what would move the needle for us is the ability to get a human being on the other line, not just a human being on the other line, but a human being with agency, a human
Right.
being who can actually do the things that they say they want to do and come to solutions for us. That's the most impactful thing. And I got to tell you, for most of our organizations in our position, much more impactful than an extra, you know, uh, 0.25%.
I'm going to use that, Uriel, as your takeaway. I would just say briefly, I was able to help a small not for profit that was trying to get communication to a small bank that they were doing business with, but that small bank didn't feel it had the capacity to handle some of the wires, even though they weren't even the level that you guys are at. But once they talked to one another, figured it out, they were able to say, "Oh, okay, we understand what you need, what we need, that sort of thing." So it sounds so basic and so simple, but obviously it can solve a lot of these challenges. There's no question. Julia, last thoughts, takeaways.
I just think that the more work is needed on this. Yes, progress has been made in the past, but clearly we need additional attention to this issue. We need stronger communication. Those roundtables that a lot of us attended in the past, I think we need to bring them back and really bring concerted, ongoing attention to this. It's a balancing act, like Sierra said. We don't want to throw out vital anti-money laundering tools. We need those tools to keep us safe from bad guys, including Russian oligarchs who are harming Ukraine. But we also need to find a way to implement those tools thoughtfully in a way that it doesn't harm civil society, immigrants, other vulnerable groups. So we need to keep talking and need to find that right balance.
Sierra, 25 years ago, obviously, was 9/11 and then the Patriot Act. Back then, I was with a trade association for banks, and we made the case to Congress that you should cover everybody. Anybody that had a financial footprint should have some obligation to report suspicious activity. And we know to date, and we saw it in the Atlantic Council's testimony last week, that investment advisors, real estate, gatekeepers are still not covered. A separate issue from communication, although it's very relevant. If everybody's got skin in the game, then there's going to be more calls for that communication that Uriel and Julia have talked about. What's another takeaway from your perspective? And obviously, the committees are still looking at reform. We hope it's the correct reform. What's another takeaway for the audience here of both AML professionals, and I'm sure there's some government people on the call today as well.
Yeah, well, I think the example that we started with at the start of the call was just it's got the wheels spinning for, new policies that we could be exploring. And just, we look at all these complicated things like we talked about 314B, but you really talked about better education for nonprofits, but I don't know that the onus should not just be on them. There needs to be better communication overall and understanding, just the fact that due diligence happened after the account was closed, clearly there are more basic issues that we need to be solving first. So yeah, just lots of work to do, I think, echoing what my fellow panelists said.
I want to thank you, Sierra, Julia, and Uriel. This has been great. Well, going to have you back because we want to see improvement in this space. As Sierra said, a lot more work to do. But thank you, everybody that's been on today. The June program will be on AI and related topics. More to come on that. We will, as we send this recording around in a week or so, give you some resource material included in that posting. So look for that as well. Thank you, everybody. Stay safe. We'll talk soon.
Thank you.